I'm John Jenkinson. Let me set the stage for you here. Monday, the markets will be closed in observance of the New Year Day. So we'll have a full week of trade this week, a full day on Friday anyway. Government reports are going to be delayed until Friday. So we'll have the export numbers out on Friday. Ethanol numbers will be coming out here in just a little bit. Monday, the markets will be closed, and we'll resume Tuesday for another kind of a shortened trade week. So let's go see how the markets are getting ready to go into 2023. And this corn market got so close to getting all the way up there to some key levels. And then this morning we've backed off a little bit, but we are off of the lows. 681.5 on the March corn. That's down 1 1/4. The low is 678.5 from the overnight trade. Got as high as 682, so we've backed off a half a penny from the earlier high. New crop December's down 1/4 at 611.5. But just as I was speaking here on our live and instant quotes from bar chart, July and September corn have actually went unchanged. We've still got gains going on in the soybean market after a lower trend last night on the overnight. January up 6 3/4, 15.13 1/4. Got as high as 15.16 1/4. August is up 16 cents for the Chicago wheat market. And we'll start with the March. It's down 13 cents at 772.5. July down 12 3/4. Kansas City wheat on the, let's go with July. That's the new crop, down 12.5, 857.5. Minneapolis new crop July wheat down 11.5 cents. Also, right now, it's trading at 903. And the cotton market down 8 points on the March at 83.18 as we welcome in Mr. Chris Swift, Swift Trading. Chris, good to talk to you today. Hey, we got so close at making some big numbers over here on the corn chart, and then things kind of backed off a little bit, but now we're starting to firm again. Do you feel that this corn market may take another run at some of those numbers up there close to that $7 handle?
Good morning, John. Honestly, maybe, but here's kind of what we look at, what the situation has evolved into. We've seen very little farmer selling to take place in the latter part of this year. And I believe we've still got all these end users that need that product. And so we've just seen a little bit of a reluctance to market any more grain, but still a great need for it. When you get into the first of the year, you're looking at a new tax year, and you're also looking with money that is either A, costing you more if you have to borrow it, or could put it on deposit. So there is a little bit of a different change coming into next year. So thinking that they might move towards that 7, it is possible. But I'll tell you, looking at new crop prices here and thinking that the new year could change some dynamics, I'm a little hesitant to be bullish right here.
Well, what about soybeans? We're clear up here in the $15 level right now and still trading kind of close to this. And it was the first one to come out of the chute on the higher side today.
It was, and both products, oil and meal, and the biggest probably story was in the meal market a couple of weeks ago when we saw a tremendous $60, $65 move in the meal prices. So beans are still a little bit shorter supply. Very much concerned with South American weather, and I think that's what's probably keeping it firm more than anything is there's not been a change in the weather forecast that would relieve some of the drought pressure from there.
Boy, I'm glad you brought up weather. The wheat in Kansas and the wheat belt looks absolutely terrible right now.
Yeah, and it's kind of interesting to see that there's not been really any big push to push wheat back higher again. We just kind of traded a slightly sideways range, but I have to believe that at some point in time, European wheat and the Russian wheat and all like that, they all come into able to increase their exports just a little bit more and kind of relieve some of the world issues. And Australia's got a good wheat crop.
Mr. Swift, don't go anywhere. We're going to come back and talk about the cash cattle trade and get to those futures right after this. First stop, the futures, live cattle. Let's go there first because we're waiting to see what could happen with this cash cattle trade. We're up a half $1, $157.95 asking prices. At least the latest I saw was $158, so that'd be just about in line. All of these contracts in the live cattle are 12 to about 35 cents higher. Feeder cattle, they've turned higher after looking for direction earlier this morning. We're 45 cents, 37 to 45 cents higher. January feeders up 37 at 183.85, but that August 203.07. That is up 52 cents, just really taking off here. Over in the hog market today, lower on the front three contracts. February down 72, April down 30, May down 27. But June and July are up 22 to 32 cents respectively. So Chris, I saw asking prices this morning, 158 in the south, 256 in the north. But look at these cutouts again, this beef cutout prices. You got to wonder here how much more the consumer is going to go to the meat case, and how this is all going to play out in the futures if these prices continue to go like they are.
Yeah, and John, what we assumed back in the summer and even into the fall of the year that the inflation would impact the consumer's discretionary spending habits towards beef, and yet we found no evidence of that. I looked today, box beef is over $270 again. We're trading higher fat cattle prices, and we just understand that there's not going to be any big numbers anytime soon to come through where it might tax packing capacity or put a little bit more beef on the market. I just can't find those areas out in the future.
All right, let's also talk about the hog market in here just for a little bit. We started out kind of mixed, but these front months really start to seem to be weakening. Is there something behind this, you think?
Well, it's the basis. So the lean hog index is at 80.69, and the futures are at 90, and we've got 2 full months to converge that basis, but it's a $10 spread. More likely than not, that's what that is. And the index has been trading lower. Today's the first day up we've seen in a long time, but we may start to see that index pull a little bit higher after, I think, 12 quarters in a row of lower hogs and pigs report. We may have whittled that hog herd down to a level that's manageable now.
What about this tie between the economy and what's going on in the protein complex? On the Dow right now, we're up 325. Can we take any bellwethers from this?
I don't think so. Most everybody's decisions for discretionary spending habits have already been formed over the last several months, especially coming into the holidays. So to see another dramatic shift in discretionary spending habits I don't see that just offhand. So I think beef protein consumption continues as it is, and as long as we don't see a huge spike in gasoline prices again to the consumer, it's probably going to stay this way.
Okay, going into 2023 then, Chris, take all of the ag commodities. Is there anything in particular that you're going to be watching for when we roll the calendar?
Yeah, I think the feeder cattle market's probably the one because everybody has a great desire to want to expand. The cycle of liquidation is coming to an end. It's probably got another 4, 5, maybe even 6 months to go before it's even stopped yet, before we start to see lower cow kill out there. But that's a big one out there because everybody understands how low the numbers are right now. The grain market's probably the biggest ticket. We've got really high prices in grains. We probably need to be marketing some inventory while it's up here and then worry about what the future shows us later.
Mr. Swift, always a pleasure. Thank you very much and Happy New Year to you. That's Chris Swift, Swift Marketing, right here in Nashville, Tennessee. Suzanne, back to you, ma'am.